If you take your eye off the ball and you let the revenues or the profits or anything just slip a little bit, the buyer's going to use that to hammer you mercilessly.
What's up, Mentors Collective? How is everybody doing today? On this episode, I've got a very special guest that I actually went hunting for, an expert in this following topic that's been of great interest to me over the past several months on my own journey. And this is why I started this show, as you all know, to find mentors for myself and to share that mentorship for all of you. So on this episode, I've got a very special guest. We're going to be talking about buying and selling businesses with the biggest expert that I can find. He's got a book called Secrets to Buying or Selling a Business, so it could not be any more aligned. My friend Sal Acosta is a managing partner at Landon & Acosta. The firm is a business broker, and they help clients buy and sell businesses as quickly as possible and for the best price possible. He's got over 30 years in the business with financial experience, with small businesses and as an entrepreneur, as well as a corporate executive for some well-known global corporations. So with that being said, Sal, thank you so much for joining me on this show and for taking the time to share your experience with me and with my audience. Thank you so much.
Absolutely, Jay. Pleasure to be here with you and pleasure to be here with all of your listeners, and hopefully we'll give them some basic information that they'll find useful. Yeah,
that's the goal, right? So to kick things off, Sal, how did you get into this business? Who are you? What have you done? And why are you the guy on buying and selling businesses? We'd love to get some background.
Well, I'm actually an engineer by academic background, and I did my MBA after that, and I started working in manufacturing, and specifically electronics manufacturing, with a lot of big companies. But as I went up the ranks, I started getting involved in making deals, buying and selling subcontractors, product lines, bringing stuff in-house, outsourcing stuff, whatever. And then at one point in my career, if I was going to keep going through that professional progression, I was going to have to go overseas, and I didn't want to do that. So then I basically said, okay, what do I know how to do? What do I like to do? And what can I get paid for doing? And I said, well, it's using those same skills of, M&A and doing business deals and helping out smaller companies that, quite frankly, sometimes don't get the attention they should be getting.
Awesome. And you wrote this book. When did you publish the book?
This book is a couple years old. It was a labor of love. I can tell you, I quit twice. I would spend literally 6 or 8 hours every weekend, over like 8 months writing the book. Because, of course, Monday through Friday, you got to keep your normal business going, right?
Yeah.
And like I said, I quit twice, but I took it up again, and it's one of those, the obvious thing, right? Until you actually get it on Amazon that people can read it and people can buy it, it doesn't count. So I was finally able to get it over the finish line.
Well, congrats. And Secrets to Buying and Selling a Business. I'm going to have to pick it up and read it for myself, but hopefully we can get the abridged version in the next, 20 to 30 minutes. So obviously very different things, buying and selling a business. And to be an expert in both is pretty profound. And we could probably spend an entire episode on either buying or selling. But while I have you here, and I know your time is valuable, let's try and hit as many important points for each buying and selling as we possibly can. I think that would be super valuable for me as someone who would eventually like to start buying some companies and start acquiring some businesses. And for me as a junior entrepreneur right now who has sold part of one and is about to sell another one next week, I've got a lot to learn, and I know a lot of my listeners have a lot to learn. So let's start with selling a business, because I feel like that's going to be the most pertinent for the most amount of people who are listening, as most of my listeners are somewhere around my level and around there, as opposed to being at an M&A venture capital firm looking to acquire companies. So basics of selling a company. Let's just start there, and you probably know where to start better than I can question. So for people who are looking to sell a company, what should some things that they're thinking about be? Where does that thought process start?
Well, so a couple of advice and tips, and the first one is the obvious, but again, nobody does it, and it's to start as early as possible, and that'll even work into some of the other tips, but sometimes people want to sell to retire and maybe collect Social Security, Medicare. So they're planning for a certain age. I always tell them, look, even if your plan is to retire in 5 years, it doesn't matter. Come talk to me now. And I don't mind having a conversation, 5 years ahead of, or however many years ahead of when you want to sell. And to kind of tie that into a couple of other things is, one thing that I like to do when somebody says, I want to sell my business, is I like to do what's called the reverse due diligence. So first of all, the due diligence is a point in the process where the seller has told the buyer certain things about the business. And now the buyer's coming in, typically with his team of advisors, lawyers, CPA, maybe a broker on his side. And they're going to go through everything with a fine-tooth comb to make sure that everything that has been told to him is true and correct. I always tell the buyer, or the seller, before you even start that process, do a thing called the reverse due diligence, which is put yourself in the shoes of the buyer, select all the documents, organize all the documents, and have them all, if you put them in a Dropbox or wherever you're going to put them, have them all collected, organized, and stored. And there's two reasons for that. One is you may discover that you have missing documents or gaps or things you can't find or things you need to produce, whatever the case may be. And that's much better to do that before you have the buyer at the table, where you can do it at a normal pace without going crazy. And then the other thing is, and you have time to correct any issues that they may need to correct, or again fill in the gaps. The other thing is, once you do have a buyer at the table, my rule of thumb is you can always speed up the process, but you can't slow it down. If you have to slow it down because there's missing information or gaps or things you can correct, a lot of times that'll derail the deal. So that's one piece of advice, is to start early and do a reverse due diligence.
Okay, awesome. And I guess putting together that first presentation of information that a potential buyer is going to want to see, I think that's a daunting experience for a lot of entrepreneurs, especially going into their first sale, especially for someone like me who doesn't love numbers so much. What are some of those key points and data points that a potential purchaser of the business is going to want to see, and how are they going to value the business based on what they see?
Okay. Well, it's going to depend a little bit on the business and the industry, but just to give you some really, really basics, typically they want to see 3 years of financial statements. So by that, I mean income statement and balance sheet. A lot of people forget about the balance sheet, and it's very important. And I know when you have a service business that maybe you don't have a lot of inventory, maybe you don't have a lot of fixed assets, people tend to kind of throw the balance sheet off to the side. Don't do that. Income statement, balance sheet, that's all important. Certainly tax returns, again, at least 3 years. And also for the financial statements, once you get past the first quarter, people are always want to see, year to date or something like that for, whatever, up to whatever quarter you just finished. So again, if the business has a location that's leased, typically they'll want to see the lease. Eventually, maybe not right at the beginning, but eventually they're going to want to see bank statements, just to see the flow of cash. And those are the absolute basics. I'm a big believer in pictures. The more pictures you can provide to the potential buyer, the better. And especially now that with the coronavirus, it's kind of we're finally getting out of it. But people want to meet in person as little as possible and travel as little as possible. So the more pictures you can provide, the better. And then beyond that, and again, this all doesn't have to be right away, but just think about it in the terms of one of the ways to increase the value of the business you're selling is to reduce the risk to the buyer. And one of the ways to reduce the risk to the buyer is to provide as much appropriate information as possible, again, at the right point in the process.
Okay, beautiful. And by pictures, do you mean like graphs and charts, or like Zoom interviews, pictures of the team, the products? What do you mean by pictures?
Yeah, I mean, if pictures of the actual location, a lot of times if it's a retail location
Yeah.
or even if it's some type of manufacturing business, pictures of the location, mostly inside and out. Again, showing the equipment, showing the layout, the inventory. Whatever is relevant to the business that people would want to see when they do an actual tour.
Awesome. And
This is going to be an interesting one, and I don't know if you work specifically with a specific sector of company and category, but there's a lot of different types of businesses out there. And there's probably a lot of people listening who've run various types of business, whether they be online services or brick and mortar or e-commerce. And not all of them are equally positioned to be sold. For example, I know online service companies are very hard to sell, whereas I know e-commerce brands and software companies and apps are a little bit easier to sell, and I'm not even 100% sure that's correct. But talk to me a little bit about that. What kind of companies are better positioned for sale, and what kind of multiple can they look to be sold at? As well, how do you value a service company versus an e-commerce versus a software?
Okay. So that's actually something that is changing fairly rapidly, as you would imagine. 5 years ago, people were not as used to buying and selling businesses that were completely intangible. So, something like a website, something like an app, something like an e-commerce store. But again, that is changing very, very rapidly. I think people are understanding that these businesses that are intangible can provide some nice revenue, can provide some nice cash flow, and that there's value in doing these transactions. I will tell you, especially for smaller businesses, it's funny because there's more of an emotional component and there's more of an irrational component to the valuation that when you're doing, bigger transactions where maybe everybody at the table is a professional manager. So, for example, there's certain industries that are just inherently attractive because people want to work in those industries. Just to give you one example, anything that has to do with pets. Okay. People love their pets. So
Yes.
buyers love everything that has to do with pets. And usually that translates into multiple buyers going after the same business, bidding up the price because they all want to be in a business with pets and work in something that's pet related. In terms of giving you some multiples, every business, like every person, is unique. But I want to at least give you a baseline. And sometimes, by the way, it surprises people how low these multiples are. And that's a lot of times a disappointment for the seller. And that's also why we need to start early, because if they're not happy with the multiple and they're not happy with the valuation, they still have time to improve that business to get a higher multiple or a higher valuation. But very rough thumb in the wind, you're probably looking at 2.5 to 3.5 times cash flow, net cash flow. We use a term called seller's discretionary earnings, which in a very rough way, you think about that's the money that the buyer puts in his pocket, however he does it, whether he does it as a salary, as a draw, as a dividend, it doesn't matter. And so you're looking at 2.5 to 3.5. And again, we can talk about, if you want, some of the things to then try to improve that a little bit.
So somewhere around 3 times the annual profits that the owner could otherwise take. That's what that
Yes,
business would be
and
worth.
not to split hairs, I would say cash flow because, and even more specifically, seller's discretionary earnings,
Yep.
because that can sometimes be a little bit different from profit, and even just the actual cash flow reported.
Okay, awesome. That's helpful. And I know that number, the 3 times, varies. I think software companies go for a little more, some a little bit less. Do you think it's worth it for people to sell their companies in most cases? I guess there's a lot of reasons for exiting a company, right? You're old and you're retiring versus you're just trying to exit this project that you started to move on to the next thing. When do you think it's worth it to start looking into to selling and exiting a company? I know that's a very subjective question, so I apologize.
No, and that's fine. I will tell you, in the context of what I'll call relatively low multiples, certainly you have to, there's usually another motivator.
Yeah.
Okay, beyond that 3x on cash flow. So let's just talk about some of those. Some of those, to your point, is exactly that requirement. They're gonna, collect Social Security, get on Medicare, maybe they've saved some money, whatever. They just don't want the hassle of running the business day to day. And so retirement's always a good one. And that's one I like to work with a lot. Then there's others that are still necessary, but maybe not as fun. So, for example, a divorce. It's a husband and wife team, they run the business together, but now neither one wants to pay the other one or to stay on or whatever, so they just want to turn it into cash, to split it in some proportion and go their separate ways. So you have, that situation. Sometimes you have a situation which a lot of times is tied with age and retirement, but not necessarily. Somebody may become incapacitated, mentally or physically from running the business. So, and again, nobody in the family wants to take it on, so they just want to sell it. And the last one that I'll mention is, and this is especially true again for the smaller type businesses, it may be a relocation. One of the spouses has a very high level corporate job, government job, military job, whatever the case may be. Sometimes they need to move somewhere else for a promotion. And now that spouse has a small business and it's not relocated, so they just want to sell it to be able to relocate with their spouse. So again, just to give you some flavor of the types of things that might motivate a sale beyond simply that multiple.
Okay, beautiful. And for somebody who does want to sell a business for whatever reason that we just spoke about, and that's essentially what you do, right? You broker businesses. You take on companies that are looking to sell and find them a buyer. Is that correct?
That is exactly correct. And we try to do the process as much soups to nut as possible. So, in the very beginning, starting with generating the marketing documents, the teaser documents, the online postings that you will need just to let people know that this business is up for sale and start the marketing process. And then all the steps all the way down to the end to taking you to closing.
That's awesome. Done for you service. What kind of percentage do you guys take when you make the sale of the business? I assume that's the model. Maybe it's not.
Well, there's different models. So I'll just speak to a couple of the models very briefly. A lot of business brokers have clustered around 10% of the transaction.
Okay.
Certainly there's a lot of them doing that. Some of them have clustered as a little bit of a hybrid model where maybe they charge a fixed setup fee up front because, again, of all the marketing documents and all the work that's front loaded that they have to do, and then charge, again, a success fee at the end. That may be anywhere, again, between 7 and 10%. In my firm, we use a little bit of a hybrid third model, which is we charge a small monthly retainer, somewhere in the neighborhood of $700 to $1,000, and then we charge a 7% success fee. When the deal gets closed, and hopefully that's the case.
All right, beautiful. Now, how about the do-it-yourselfers that want to try and sell their business on their own without a broker? Are there any resources or tactics that you think they should find to find buyers? Are there marketplaces where you can buy and sell businesses? Because I don't know of any, but then again, I haven't looked. So what are some of those resources?
Yeah, I mean, there's multiple websites. Obviously, most of them charge for you to be on them. So, and I don't mind disclosing. I mean, a very popular one is one called bizbuysell.com. The only thing that I would caution is, it's like everything, you as a business owner trying to sell your business, it goes to the whole concept of, the lawyer that has himself for a client has a fool for a client. And it also goes to the concept like surgeons, typically don't operate on family members. And the reason is, you lose objectivity, you become emotionally involved. Beyond your contacts in your Rolodex, beyond your academic background, beyond your technical knowledge, I think one of the biggest things that a broker brings to the table is that objectivity and that emotional removal. So that's the one thing that I would caution people that are trying to do it themselves, and beyond that, I mean, as a shameless plug, I would recommend grab my book from Amazon and read it, because at least that'll give you a basic starting point.
Yeah, that's great advice. And like I tell everyone about hiring an expensive accountant, you might pay an extra $10,000 a year for that expensive accountant, but that accountant is probably saving you 15 to 20% per year. So just like using a business broker, you might cost a few extra percentage points, but at the same time, if you getting this thing done right and effectively, could end up turning out a massive profit. So I definitely see the value there.
Oh yeah, absolutely. To maybe just reinforce what you said, even when we're charging a 10% success fee, I am a firmly and honestly believer that we'll get you a deal that's at least 7 or 10% better. And remember too, it's just not the actual purchase price. There's a lot of terms that you have to negotiate around that purchase price. And I know it's easy for me to say as an intermediary, but sometimes those terms are actually more important and more valuable than just the purchase price, dollar for dollar. And then the only other thing that I'll say is, it's like, I can fix my car, okay? Some simple stuff. And it might take me an hour, or it might maybe take me 2 hours. But a mechanic that does that all the time, it might take him 15 minutes or 20 minutes. So, part of the question is, do you want to involve that effort and that time and that sort of, making your parachute on the way down, where you could bring in somebody that has done it before and knows exactly how to do it? And last thing I'll say, not losing perspective of, when you're putting your business out for sale, the most important thing the business owner has to do is to make sure that business is hitting on all cylinders. Because if you take your eye off the ball and you let the revenues or the profits or anything just slip a little bit, the buyer's going to use that to hammer you mercilessly. So you as a business owner should, quite honestly, delegate that process, which is time consuming, to the broker, and you focus on making sure that business is doing as best as it can, so that you can sell it for as much as possible.
Absolutely. And I don't know how closely you've been following Biden's tax plans for capital gains, but do you think this is going to influence the buying of selling businesses going forward? And just for reference for everyone listening, I think he plans to increase or get rid of the capital gains tax difference, and it's going to be on anything over $1 million, like 46 to 50%, just off the top. So you sell a company for $2 million, you take home like $1 million, depending on what state you're living. That could be even worse. That loses a lot of incentive to sell a business. Do you foresee that causing issues in the future?
Oh, absolutely, Jay. As a matter of fact, I will tell you this. A week or two ago, I actually did a post on my LinkedIn account about exactly that, because even though the concept is still in flux and there's many things that are unclear, maybe starting with two basic ones: what exactly is that percentage going to be? And then also, is it going to be for next year, or is it actually going to be retroactive for this year already? But even taking that uncertainty aside, I did a post warning everybody about that. And the only thing that I'll say here is, even if it's for next year and you want to sell your business before it happens, we're sitting here in May. Selling a business takes 6 to 12 months. That's another kind of rule of thumb. So I would say, if you want to sell before the end of this year and before we get into those higher taxes next year, you literally need to be starting right now.
Yeah, and that's what I was thinking. People who are looking to sell, like, get that thing out of there as fast as possible, because that's scary. I mean, 50% of your business, like the value of it, it's just going to the government. Who would sell their business at that rate? Anyways, that's a whole other conversation. It's going to affect investors. It's going to affect business owners who are looking to sell. Scary, scary stuff. Okay, Sal, as we're kind of approaching that 30-minute mark, I do think the conversation about buying a business it's super interesting. Looking to acquire a company, and then what do you do once you have it? Probably not best suited for my audience, but would love to do maybe a separate episode on that, specifically focusing on buying a business. But for this last couple of minutes, would love to kind of open up and give you the floor to give some of your top bits of advice for entrepreneurs who are going into the business for the first time with the mentality that they want to exit, they want to sell eventually, and people who have existing businesses that might be thinking about it. What are some of the most important key points you've learned over the years, maybe even the biggest mistakes people have made when going through this process?
Well, I'll give you just a quick sort of philosophical point. To maximize the value of your business, you basically have to turn it into an ATM that produces money repetitively, consistently, and ideally even a little bit more all the time. Okay, so that's kind of the mental model is, how can I turn my business into an ATM that produces that money consistently, repetitively, and maybe even and growing over time? Okay, and that actually entails putting in for the owner of the business, putting in the right human infrastructure, okay? Because a lot of times what happens is when that business gets sold, one of the big worries by the buyer is, as that owner exits and disappears, independent of that training and that transition process, how much value is going out the door with that owner? So you have to create that infrastructure so that that owner can go away into retirement or to whatever it is he's doing, and the value doesn't go away with him. That's one. Along that, I mean, there's a lot of things we could talk about, but just to mention a couple real quick, is there a way for you to guarantee some type of recurring revenue for the buyer that's coming in through, whatever, contracts, service agreements, however you do it, subscriptions, there's different industries do it different ways. And then the other one is, maybe another one that I'll throw out real quick, is make sure you're not too reliant on a single customer or a small group of customers, because again, that makes buyers very nervous, right? If 70, 80, 90% of your revenue is with 1, 2, or 3 customers, they're going to say, well, wait a minute, what happens if that 1, 2, or 3 customers go away? Do I all of a sudden have a business that is losing money instead of making money? What happens to my valuation? I mean, all these things, right? And conversely, and people don't think about this one a lot, on the supply side, is there a single vendor or a single supplier that is absolutely critical to my business, that if something happens to them, a bankruptcy, even a natural disaster, a strike, I mean, all the things that can happen to any business, if that happens to my supplier, or I'm single source and it's a critical part, now how does that affect my business? So those are just, again, I mean, there's a ton of issues that we could talk about, but those are a couple that I think are super important and I've seen in real life.
Yeah, so a couple takeaways there. Make sure that your business is able to print money without you there. Very important. And then don't be too dependent on one either customer base or one supplier vendor. And I've actually seen that become a problem in some of my businesses as well, that I've learned from that. Always have multiple vendors ready just in case something happens, because something always happens and it's never what you expect it's going to be. So awesome. Sal, thank you so much for coming on this show. What is the best place for people to find you if they want to maybe ask you some questions or looking to sell their business and want to do business with you?
Well, the easiest thing is I'm not shy about receiving phone calls, so you can call me or text me. People like to text. You can call me. I'm old school. 484-358-9470. Again, 484-358-9470. If you want to email me, my personal email is Sal, SAL459 @yahoo.com. Again, Sal, SAL459 @yahoo.com. Both of those go straight to me personally, and be delighted to help in any way that I can.
Love it. I've never had someone give their phone number on the show before. risky business. So you're going to expect some weird calls. Just kidding. Everyone listening should be pretty respectful. And also don't forget to grab Sal's book, Secrets to Buying or Selling a Business, on Amazon. I'm going to link it in the description here. And Sal, I just want to thank you again for coming and talking about selling a business. I learned a lot. I know everyone listening learned a lot. And if you're listening and you learned a lot, please drop a 5-star review. But Sal, thank you so much again. This was a lot of fun.
Thank you for having me on the show, Jay.
You guys, if you loved this episode, do me a favor and click on the link in the description and head over to our exclusive Mentors Collective Facebook community, where I post every single day and I give tons of value that I do not post in this podcast. Seriously, if you love this show, you are not going to want to miss that group. You'll also be able to connect with me personally, ask questions, and get access to a ton of free resources that I give out. All right, guys, again, thank you so much for listening, and I'll see you on the next episode. Peace out, mentors.